Hi traders, in this lesson I want to teach you what I believe is the number one reason why most traders fail. Now I mention this because I get a lot of people who come to me to help them to trade, to coach them, to mentor them, and the very first thing that I do is ask them, what is your number one struggle? What is the number one challenge that you are having when it comes to your trading? And of course there are lots of reasons, they are wide and varied. But generally speaking, it comes down to they're just not consistently profitable. They can't get any real momentum going with their consistency. They make some money, they lose money, they make some more, they lose a lot. It's just this kind of never-ending roundabout where they just don't get any consistent momentum going forward. And the reasons for that, you might find are a little bit surprising. Now, you'd be forgiven for thinking it has more to do with the technical aspects of trading, such things as being able to identify a setup, for example, correct money management skills, understanding how to read this action within the context of the market, the pairs you are trading, the time frame you're trading on, how often you trade, and it goes on and on and on. And yes, all of these are very important. And yes, they need to be taken into account. And yes, they need to be learnt. And they are certainly simply learnt skills. It's not difficult to learn technical aspects of trading. What is difficult, however, in my view, is simply this. The underlying factor why 95% of traders are not consistently profitable is simply because of their emotions. Let me explain what I mean. There are four main emotions that will kill your trading account quicker than you can imagine. They are greed, fear, hope, and regret. So in this short video, I want to cover greed and fear, because if you don't have these emotions under control, it makes no difference how technically proficient you are. If you are motivated by greed or paralyzed by fear, you are never ever going to be what I would call a successful trader, let alone a professional trader. So let's rip into it. Let's start with greed. First of all, greed is a fairly normal human emotion. In my view, we've all been greedy at some point in our lives. We're human. When we want something or when something good happens, we want more of it. That's just standard. However, there is no room at all for greed when it comes to trading. Trading is one of those very unique vehicles, very unique opportunities where it entices you, if you like, 24 hours a day, 5.5 days a week to make money. That is a very, very enticing thing, where literally you don't have to do too much, just push a couple of buttons and you're in the market, where you have the opportunity, quite rightly, to make money. However, you also have the opportunity, of course, to lose money. And this, in my view, is where most traders fall down. Why do you think only 5% of traders are successful? Because they're not doing what 95% of traders are doing. And one of the things that 95% of traders are doing is letting their emotions dictate their trading. Your emotions dictate your actions. If you want to be a successful trader, you have to be in control of your emotions, not your emotions in control of you. So what typically happens? You look at your charts, you're enticed to take a trade. Somewhere along the line you have this myth or misconception that trading is an easy way to make fast money. You have probably seen some garbage online. You've been sucked into the narrative by so-called professionals, trading gurus, that you can make money fast, make X amount of money per week, 95% accuracy rate, earn 5,000 pips per week. All of that absolute crap. That's not trading, guys, and if you think that's what's going to happen, I would strongly suggest to you to find something else to do and don't trade. Trading isn't for you. The reality is, if you think that you are going to make money fast, therefore be greedy when it comes to trading, you are delusional. Now, I'm not being mean in saying that, I'm being real. You are not. You have just tapped out of reality. That is not how trading works. Trading is a long-term game. It's a long-term venture. If you think in weeks, let alone days, then you probably shouldn't be trading. You need to think in years. You are learning the highest paid skill in the world for the rest of your life. If you've ever done, let's say, an apprenticeship or gone to university to gain a profession, how long do those things take before you've mastered your learning? It takes years. Why on earth would you think learning how to trade the financial markets would be any different? Forex can give you the opportunity to give you remarkable rewards for the rest of your life. So why would you think you're going to get there in a month, or at least in a very short time frame? It's just unrealistic. It doesn't happen. You are not going to make 20%, 30%, 50% profit per month consistently, month in, month out from trading. Warren Buffett doesn't do that. You're not going to do that. If you think that way, then once again, you shouldn't be trading. So, back to greed. The market entices you to trade. Now, you've read or watched something, you are under the illusion you're going to make money fast, and you decide to enter the market. If you enter the market thinking you are going to make money and really not giving too much thought to what you could lose, traders, it's like taking the stairs up and the elevator down. You will wipe out your trading account quicker than you could possibly imagine. Let me give you an example. Have you ever been on a demo account and you have done quite well, and then you think, okay, I know what I'm doing now. And by the way, traders, I have done this. I've been guilty of this. I have lost a ton of money when going from a demo account to a live account. So have you ever gone from a demo account to a live account, and what happens? Now, not all the time, but in most cases, most of the time, what happens? You start losing money. It's like the complete reverse of what you were doing on the demo account. Why? What happened? What's the difference? The difference is you are now trading with real money. Now, of course, you know that, but it has an emotional shift inside you because you have your money on the line. This is real time. This is a real game that you're in. So you begin to develop one of the two main emotions, greed and fear, because you have X amount in your trading account and you want to increase that amount as fast as you possibly can. So there are normally, you will normally end up trading more money than you should by thinking this way. You'll end up risking more money than you should. Now, I know this sounds obvious, but you would not believe the amount of people who are risking more money than they can afford to lose because they are focused on what they can make as opposed to what they can lose. Let me give you a pro tip, guys. You always focus on the risk, not what you can make. It's a complete 180. You need to be a risk-adverse trader. You need to be able to stay in this game long enough. You need to be able to be comfortable losing an amount of money. So if you lose sometimes 3, 4, 5 trades in a row, it happens. You need to be comfortable if you lose that amount of money, that it doesn't bother you. You aren't moved emotionally. But if you are trading too big a lot size relative to your trading account, again, based on greed, then you only have a handful of trades up your sleeve and you're done. You're out. There is a lot of stress in there. When you have 1 or 2 losing trades, when you're risking more than you should, what happens then? You start to do stupid things. You start to revenge trade. You start looking at your charts and you think there is a trade on when there was never a trade on, and you place a trade. And to rub salt into the wounds, most traders end up risking more money than they did previously because you want to get that money back. That is not trading. That is not how you trade. So how do you eliminate greed? Well, you do it 2 ways. Firstly, you understand that trading is a long-term venture. And you should be thinking in years, not months. You should be treating your trading like a business. It's about growing your trading account incrementally, not in chunks. If you're thinking chunks, if you think you're going to double your trading account fast, you're not. You're just not going to do that. So that's number 1. Understand it's a long haul and you need at least a year, in my view, at least a year to become what I would call a successful trader. Now, you can certainly be proficient in less time than that, but you need to think in years. You need to give yourself time to iron out all the bugs, all the mistakes that you are going to make. Remember, you are learning the highest paid skill in the world. Trading is about keeping your powder dry, having enough bullets left in your trading armory so you can stay in the game. It's not about going in hard. It's not about going in big, only having a small amount of trades up your sleeve. That's just ridiculous. So number one, to understand, to eliminate greed, is to understand and develop a long-term mindset. Number two, take the stress away from you. You need to dial back the amount of money, in most cases, that you are risking. I'm going to get into, now I'm not going to get into money management on this particular video, but in my view, you need to have at least 20 to 30 trades up your sleeve. Now you're not going to lose 20 in a row, that's just ridiculous, but you need to have enough trades up your sleeve so you can cope with the number of losses in a row. Understand this, trading is nothing more than the random distribution of winning and losing trades. I highly encourage you to buy the late Mark Douglas's book, Trading in the Zone. It's a classic, where he clearly states trading is nothing more than a random sequence of winners and losers. So if you understand this, if you understand that you have no idea at all of the outcome of your next trade, you don't know if it's going to be a winning trade or a losing trade. So if you don't know the outcome of something with any certainty, because in trading, as you know, all we ever do is deal in probability, the best we can ever do is position ourselves in a high probability setup. If you don't know the outcome of anything with any certainty, why on earth would you risk more than you should and voluntarily put yourself in a stressful situation because you've got your greedy blinkers on, your rose-colored glasses on, and greed has motivated your decision? That is just the epitome of stupidity at its finest. If you don't know the outcome of something, you only risk an amount of money that you are comfortable risking over and over and over again. It takes the stress away from it all. If you focus on how much you can lose and not on how much that you stand to win potentially, you will be a winner. The profits will look after themselves. So always focus on the money in real time that you could potentially and lose and will lose. And if you do that, and if you're comfortable with that, then guys, you are halfway there. Let's quickly talk about fear, and I'll make this quite short. What happens typically when people have, let's say, 4 or 5 losing trades in a row? Understanding this, let's just say your trading edge plays out half the time. So out of 10 trades, you win 5 and you lose the other 5. Now that's fine. By the way, traders, you may be surprised to learn that the best traders in the world are 50-50 traders, maybe 60-40 traders. There are a few individuals who are around 70-30 traders, but 50-50, 60-40 is about as good as it gets. So let's assume you are a 50-50 trader and you have a trading edge that plays out in your favor half the time. Now you don't know which of those 5 are going to be a winning trade and which of those 5 are going to be losing trades. So let's just say you've had 3 losing trades in a row and you start to become a little fearful that your next trade will be a losing trade as well, because you think, well, the last 3 didn't work out. Obviously, I'm doing something wrong. I need to find a different way of doing things. I need to find the next shiny toy. I need to find a different method. I need to try a different indicator. All of that crap, when in fact it's not necessary. All you need to understand is, if your trading edge plays out half the time, or even 40% of the time, if your money management skills are on point, you can be very profitable. So to eliminate fear, if you know that your trading edge plays out, you just keep on doing what you're doing. Now clearly, if you're losing 10 trades in a row, you need to be changing something. That's obvious. But if it's working out half the time, that's fine. That's great. And as your skills develop, as you are on your journey, you may very well move into that 60-40 camp. So again, in the meantime, dial back how much money you are risking. You shouldn't be fearful of taking a trade if you have a trading journal, and you need a trading journal, by the way. And if you refer back to that trading journal every month, And if you find over a period of a few months you have found that half your trades are working out and the other half isn't, then that's fine. Every professional trader has these two goals in order. Number one, first objectives, in order. Number one, capital preservation. And then number two, growth. So get out of your head how much money you stand to make and get into your head how much money you stand to lose. So traders, in wrapping up, this is just fundamental, guys. You need to focus on the loss and you need to know that you are in this thing for the long term. This is a long-term business venture that you are in. So traders, I hope in a small way you found this lesson helpful. Until next time, until I talk to you again, see you later. Happy trading.